welcome back, guys. So I made a video on how I made $19,000. So a lot of people reached out to me that I should go more in details on what I did right or during the process of how I made that money, right? So this is me trying to show you guys bit by bit of what I did right, okay, and things I didn't get right. But here in today's video is going to be all about the 4 phases of the crypto market cycle, okay. So on the last video I talked about how to use the ATR, okay. So the ATR, how it will help you to get into the market and all that. So this is going to be like beginner friendly. I'm going to try my best to make it beginner friendly in a way that when I'm going to be talking about the technical aspect, okay, it's not going to be really hard for you, okay. The technical aspect is going to be on the episode 3. Yeah, I show you guys the basic technical analysis, okay, like technical skills that you can use to get this all right, because a lot of company out there, they don't use a lot of big let's say a method of analyzing the market to get things done. They use the 4 crypto market cycle because all the whole businesses out there in the world have core cycles, okay. So when you understand these 4 cycles, you can get to know on where you're standing on, and with that you can make a lot of money. So with this information, you can as well then apply a little bit of, let's say, a basic technical analysis and all of that into your trading, and with this you can turn any amount of money that you have into huge amount of money. So the first phase we have right here is the accumulation phase. As you can see right here, this is the accumulation phase, but have in mind that we have about 4 phases, okay. The first one is the accumulation phase, the second one is the markup phase, the third one is the distribution phase, and the last one is the markdown phase. So the first phase is actually, you know, you guys already experienced on what happened, had experience of what happened during the lunar crash, right? So as at last year 2023, that crypto markets crashed. Bitcoin went from $100,000 to $30,000 or $20,000 and all, okay. So that is the accumulation phase. So during accumulation phase, people don't have interest to invest, so that's when you should be investing. The accumulation phase was the last phase as at that 2023, okay, that the market was crashing. People weren't having interest in the market and everything. So because there were a lot of FUD, okay, meaning that a lot of news were coming out there that Bitcoin isn't going to be doing well. Government doesn't want to accept Bitcoin, and some of that, like, you know, FUD like that, like news like that. So characteristics of the accumulation phase, that what you should expect during this accumulation phase, this is when you see that there's disbelief and uncertainty in the market, okay, whereby there's low interest. Everybody out there are just scared. So in this case, nobody's buying. There's low trading volume, meaning that nobody's buying anything. Institutional investors are calm. They are not really doing too much. That is what they call the accumulation phase, and we are actually going to experience a Bitcoin halving, which is going to help boost the price of Bitcoin. And if you check, that's the reason why Bitcoin have been increasing, and many crypto out there as well are doing the same. So when people are fearful, that's when you should be taking advantage of the market by dollar cost averaging. You want to be buying small. On episode 3, I'm going to show you guys on risk management, so you know on how you are going to do this well. So coming on the markup phase, okay, I'm not trying to tell you that this markup phase right here, okay, that you're late, okay, like you're already late. No, because during this markup phase, okay, if you are using the ATR, I'm going to show you guys on how to use the ATR to still find opportunity, okay. I may do that right in this video, okay, or I may do it on the next one, so make sure you're watching this video. The markup phase is commonly referred to as the bull market phase, okay. The markup phase is when the market moves higher in prices or in price at an increasing rate. During the markup phase, new groups of market participants enter the market, and with that generally comes a notable increase in volume at the beginning of this phase, meaning that this is the phase where we are in right now. Like, a lot of people are not going to be scared to buy or like to take advantage, like to buy coins and all that, because right now they are seeing that the market is increasing. Don't forget that the market have demand and supply. So when there's demand, the market tends to do more, right? So when there is that supply, a lot of people interest is usually like not like too much in the market. So right here, we're having a lot of demand now in the crypto market. So people are buying. So the market will keep on being on bullish. So there's not going to be a huge down moment for crypto during this period of time. So from a market sentiment standpoint, despite still being cautious, market participants start becoming optimistic about the outlook as companies first begin publishing positive headlines, which is actually now okay because if you check it, there are a lot of market sentiment out there. Okay, like there are a lot of sentiment out there where you can see that they are even posting like news saying that Bitcoin is going to be there, blah blah blah. So as all of these stuff is coming by, okay, the market is getting more volume. Okay, and you want to be part of the market. So what matters in this whole system is that you knowing on the right time to enter. So that's the reason why I use the ATR, because the ATR helps a lot, because when the volatility is high, you don't want to buy it, and when the volatility is here, you want to buy. When the volatility is high here, this is where you sell. So you don't want to keep buying where you're supposed to be selling, and that's the most common misconception for a lot of traders. So that is it. So coming right here, the demand for an asset begins to outweigh the supply, okay, causing prices to appreciate in value as a result of coming here on the characteristics. Okay, market sentiment is dominated by optimism and excitement, meaning that when people are happy that they are seeing that bullish momentum and all, they tend to keep doing more. Okay, and there's as well what they call an uptrending price chart, meaning that the market is bullish. So as you're seeing now, you're happy when you see that you'll be able to put about $50 in your crypto. And you woke up the next day saying that $50 is now times 10 of the price. You must be happy, right? So coming on here on the increased trading volume means the demand I'm telling you guys about, okay, meaning that more people are coming in the market, and the more people, the more volume. So coming on the favorable economic condition, okay, this is where you see that a lot of even the US government will say, okay, there's going to be ETF for Bitcoin ETF and all of that. There's going to be a lot of news, like economic news and all of other stuff. Okay, some will favor Bitcoin or the crypto market, but majority will favor it because this is the cycle we are talking about. You should understand the cycle, and with this cycle, you may only need to know a simple technical analysis that will get you up right there on the markup phase. Okay, we all should be able to understand that some crypto out there are not going to do well, okay, right? Yeah, during this markup phase, okay, because some crypto may be affected by negative news, okay, yeah, because remember, each crypto have got each like their news differently. So now this is how you can be doing well as the markup phase is taking place. And I come on CoinMarketCap. I'm gonna use this right now. So you come on CoinMarketCap. I'm going to leave the link for you guys in the description. So when I come on CoinMarketCap, okay, I'm only looking for a few things. Okay, right here, as you can see, okay, we have list. Hold on a little bit. Yeah, right here we have list of coins that are the first, second. Okay, like you can see on the ranking on which coin is doing well. Right here, you can see that we have Bitcoin on first, we have Ethereum. So these are the coins that you need to have, right? So forget about the Tether USDT, that's a stable coin, so you must be aware. So BNB is Binance exchange token. So you can see Solana. So now this is what you do. So you have to focus on Bitcoin first. Make sure you have Bitcoin, a little bit of it, because since it's like so overpriced or expensive, you don't want to get your mind into it, because the only ones I feel that will make you a lot of money for the most part is the small ones like Solana, okay, and anyone that is still kind of like around $50 or $40 or around that kind of price. But don't get into low cap. Low cap coins are mostly coins that are around 1 cent, stuff like that. Like this one right here is a low cap coin. Don't get into it. But low cap coin can still make you a huge amount of money. That's where you have to check on the utility to see what they have right there. Because most of the times the utility as a lockup coin, it means that it's still like a startup. So meaning that any money you have in like right there invested, okay, you have it on 50-50 level. Yeah, I understand the whole system is like on 50-50 level, but when you are investing in a short system, it's more better like a system that is like, when I say show, I mean it has been profitable, right? And it has been doing well, and not like a coin that haven't been doing really well, okay, and all. So you don't want to do that. So Bitcoin is a short system, okay. Bitcoin is a digital property. Ethereum, same applies right there. So because they've been doing really well for the last period of since let's say 5 years, okay, for the past 5 years they've been doing well. So BNB here is as well a good one. So that's what I'm talking about. So you must invest into something that that have a high winning rate, okay. The next phase is going to be the distribution phase, okay. At some point after a bull run, some buyers become sellers. This is the distribution phase where the buyers, okay, where the buyers and sellers in the market are at equilibrium. So now this is actually explaining how some traders out there always kind of like losing their money like trades during this distribution phase. So that distribution phase, if you're able to see that picture, from the picture, you see that, like, hold on guys, let me just go back right there. I want to make sure that everybody's following. So you can see that right there on that distribution phase, like, there's nowhere the market is about to go anymore, okay, because there has been a lot of demand in the market, okay. Now you can see here is the distribution phase, okay. So the market is supposed to go down because this is the highest like resistance base. So in this case, a lot of buyers, people like some newbies in the market, this is where they start to buy, okay. So when they start buying from there, so what happens is that the markets start falling. This is where they lose huge amount of money in the market. So when the market gets to this distribution phase, you don't want to start doing what? Buying. This is time for sellers to start. Like people that have been buying since during the accumulation phase, this is where they sell. Okay, so this is where they start selling and selling, right? Yeah, that's where they start selling and selling and selling. So during this time, you can't be buying because all the whole buyers, they've turned to sellers. So imagine where we have like 100% of people, investors, and we have 70 to 80% of investors selling off their investments. What happens? Remember, the crypto market have demand and supply. So there's no demand anymore. Okay? Yes, there's no demand anymore. So in this case, what happens? Since there's a huge supply, what happens? The market will have to go down. So meaning that they will start taking profit of the investment, meaning that they will start selling. So 70 to 80% of people are selling off. So as they are selling off, what happens? The market will start crashing. Do you understand? So that's that's not even a crash. That's what they call correction. Okay. Yes, because definitely the market will still come back up. So the last one on the list is number 4, which is the markdown phase. So the markdown phase is during the time when you see that the markdown phase is a bit similar with accumulation phase, okay. But the thing here that is a bit different is that this is during recession, recession. Okay, this is when you see that there's a huge, like, this is a bear market, okay. Yeah. So this is when you notice that like crypto is crashing and all that. Okay, people always tag this as recession period for crypto, okay. So that is it. So here are the most characteristics that you may like, signs that you may see in the market during this markdown phase. You may notice that market sentiment is dominated by anxiety and panic, meaning that during this phase, a lot of people tend to be very, very scared, okay. And during this time, institutional investors don't buy, like, they don't invest so much, okay. And during this time is when, since there is a lot of anxiety and panic in the market, this will create a lot of selling pressure. So there's going to be a downtrending price chart, meaning that market will keep doing what? There's going to be a huge selling pressure. So, and there's going to be like unfavorable like economic conditions, meaning that there's going to be a lot of news not favoring the crypto markets, not favoring Bitcoin and all of that. There's going to be a lot of like stuffs. This is going to be like a payback period for crypto. Like it's not going to favor crypto at all. So if you want to make money in this game, you need to understand a few things. Okay. So during the markdown phase, the accumulation phase, okay, you need to just understand one thing. You need to ask yourself, what kind of trader do you want to become? If you want to become that kind of trader, a long-term trader or a swing trader, then this is what you need to understand. I am a swing trader, okay, and this works best for me. So during this time of the markdown phase, I don't invest. Okay, but when I have money, okay, if I want to invest, let's say I have just $100, okay, with that $100, I will do what they call dollar cost averaging strategy, meaning I'll be buying bit by bit. So now let's say that the market is right here, I'll buy right here. Sorry, let's say that the market is down here, low volatility, I'll buy right here. So when the market goes against me again, what I'm investing, I invest the first one. If I invest it, I'll put in $20. The market goes against me, I'll put in $10. The market goes against me again, I'll put $20. Now I've invested like $50 out of my $100. So I'll keep my $50, which is the outstanding this thing I have with me. So I'm not going to invest that money. I'm going to have it with me just in case. So that is it. So that's how you invest during this markdown phase, because markdown phase is going to be really dangerous. It's not time when you invest like with all your money immediately, like you buy it once or less. Even if you're that kind of person that works and you don't have time to do this, okay, just make out time. I'm going to share with you guys on how you're going to do this stuff by yourself using your ATR, so you know on when to enter or when not to enter. So that is it for markdown phase. Markdown phase is very, very bad, okay, for crypto, and you need to understand. So I've been able to talk about all these phases here. The first one, accumulation phase, the markup phase, the distribution phase, and the markdown phase. Okay, so that is it. So you can see that the accumulation phase is the most important period that you must do what you must start preparing to do what to be buying crypto, because during this period there is usually low volatility, and that is what we are looking for. We are looking for few things. The low volatility, okay, is what we need. So we found low volatility on the accumulation phase, and we'll be able to find low volatility on distribution phase. So that is it. So you may choose to invest during the accumulation phase right here, or you may choose to invest on during the accumulation phase. It will help you a lot to make a lot of money. Okay, this is where a lot of money is being made. So you may choose this accumulation phase, or you may choose distribution phase. I'm talking about where I'm saying where you see low volatility. Okay, so yeah, and ATR is going to help you to identify the low volatility, and ATR works in line with the market cycle. So I've been able to talk about the four crypto market cycle that you need to survive to make a lot of money, like the way I did. So that is it. You may as well be looking towards the distribution phase and the markdown phase. So the last but not the least is the practical of what I've just explained. I want to make sure that I show you guys the practical example so you can get to understand, because a lot of people don't understand just the theory aspect. So right here is on TradingView, okay, and I'm going to try my best to make this easier. So in case if you're not able to see my face no more, okay, just focus on what I'm showing you, okay, so you can understand. So I don't want no distraction, so make sure you take notes if you can. So right here is on TradingView. So when you come on your TradingView, you go to your search, okay. So when you come on here, you type crypto market, okay. You can type crypto market, or you just type crypto mar. Okay, when you type crypto mar, so what you want to do right here is this, okay. Since I'm the kind of trader that I deal with different kind of currency, cryptocurrencies. So in this case, I don't want to keep monitoring on one particular crypto. Okay, so what I do is this. So I come on here. You see this crypto market cap right here. Yeah, that's what I use. I click on it. So when you click on it, it is going to show you the whole total crypto market cap, like it gives you the whole total crypto market view. Okay, yeah, instead of you to keep monitoring on one coin, what happens is that In this case, you're monitoring everything in one. So what I do with this is that it helps me a lot. Okay, the other video, let's say episode 3 or 4, I'm going to show you guys, because sometimes you may not be able to understand, like sometimes the crypto market cycle, okay, may be different. Sometimes it may act kind of like, it may act the opposite. So I'm going to show you guys on how you're going to know on what's going to happen in the market, so you can be careful. So yeah, right here, okay, what I'm trying to do is that I'm going to just, yeah, that's the ATR right there. Okay, if you've not watched that video, go and watch that video on how I showed people on how to use the ATR. That's the episode 1, so you don't miss out. So right here, so now remember what we talked about. We talked about the accumulation phase. Don't forget, have this. So where is the accumulation phase? So right here is the accumulation phase. Is here the accumulation phase? Let's find out. Obviously, there is not the accumulation phase. So where is the accumulation phase? So probably you're going to say here is the accumulation phase, isn't it? Yeah, because here is the most lowest. Okay, so we have another lowest one. Okay, so in this case we go all the way down. Okay, hold on. So you could say that here is the accumulation phase. So in this case, what I'd like to do in this case is that I'm just doing this just for example, okay, practical example for some other people that they want to see the practical side of it. So right here, you just put this trend line right here. Okay, the reason why I do this is because I want to like be able to go back in the past and see if we are right that there is the accumulation phase. So now we are going back in the past. Okay, you can do this on a 4-hour time frame. You can do this on 3-hour time frame using your ATR. So you can see it. So when you get a good entry right here, okay, we are okay. Okay, yes, when you get a good entry, we are okay from there. Okay, yeah, you don't have to do too much. Just get that good entry. When you get that good entry, we are fine. Okay, so now you can see that. Okay, hold on, let's be waiting for this to come up. So we only need just a few entry and we are fine. Okay, you can see, so you can see that the trend is not touching on the yellow trend line. It's not going past it, meaning that that zone is very important. Okay, so yeah, I'm trying to show you guys something. So yeah, let me do this real fast so I don't keep wasting your time. So here is the accumulation phase for those of you guys that are looking for the practical example of what I was talking about. So here is the accumulation phase. Okay, have that in mind. Okay, yeah, hold on. So here is the accumulation phase. So I need to know this accumulation phase. Accumulation. Okay, so that's what they call the accumulation phase right there. Okay, yes, that's the accumulation phase. So now, assuming you were able to get that entry from there, okay, now imagine how much you'd have made. You would have made a lot of money. Okay, so that is it. So that is the accumulation phase we have right there. So I'm gonna just get this up. Okay, so that's the accumulation phase. So now, since you've been able to see the accumulation phase, why is that the accumulation phase? Now, if you could see from here, let me show you guys. Okay, remember I said that remember I said on the other video that when ATR is up right there, it means that is a high volatility. Okay, and when ATR is when the ATR is lower to this base, okay, lower to this base, so that is what, a low volatility. But when it's high right there, is a high volatility. Okay, so yeah, when the ATR is high, okay, when you're seeing that the trend is high right there, that's a high volatility. It's not even a good time for you to buy. Okay, but when you see this, okay, when you see this low volatility, okay, what you should do is that you should know that that is a good time to accumulate more of whatever coin you are trying to buy. Okay, so that is it. So now, hold on guys. So now we have the accumulation phase, and remember the first thing we are looking for is that this accumulation phase must have what? Low volatility. So the low volatility, the better, the more faster you can run into profit. Volatility, so the more faster you can run into profit, but have it in mind that you want to be a long-term trader or a swing trader. So coming back right here guys, okay, Let's come back right here on the accumulation phase. Let's see if we are meeting up with the demand. Okay, with the things right here, you see that there's a low price volatility. Okay, and there's going to be a low trading volume. So the more, if we are having a low trading volume, it means that we are going to probably see a low price volatility. So now we have this low price volatility right here on the chart. Okay, meaning that here is the accumulation phase. So now another thing you have to understand is that during this time, a lot of people are not investing. So in this case, are people investing? No. People, we are not investing because they are scared. So that is it. So coming on the next one, which is the markup phase. Okay, let's go on the characteristics. So during the markup phase is when the market is uptrending. I'm telling you guys that that is the stage where we are in right now. So coming right here, okay, let's find the markup phase. This was around Monday 16th. Okay, you can see the date right there, Monday 16th October. That was when the market started doing what? Going up and increasing. So what do you call this? Okay, immediately the market passed this base. Okay, then we were like, okay, so market is increasing, so increasing. So right now we can call this phase that we are in the markup phase. Okay, yeah, the markup phase can be anywhere around here, because one is that the market is doing really well right now. Okay, the market will have been able to break a lot of records. So here we are in right now is what they call markup phase. Okay, so you can put this anywhere you want to put it. Okay, you are still right. Okay, you may change the color. I'm just doing this for practice purpose. Okay, so you understand what I'm talking about. So that is it. So here is the what? Markup phase. So yeah, there's a possibility that this current market, now the current market is right here, right? Okay, now you can see that the market was here before, and the market had to do what? Retrace back. Okay, so assuming you got an entry right here, okay, what would have happened is that you would have made a lot of money right here. Okay, so yeah, you would have made a lot of money, but let's not see that because we are thinking long term. So yeah, so what we are doing right here is that we have this is our markup phase. Okay, these all stuff right here, you see. Okay, is the here, all this stuff you're seeing right here, let's say that it is the markup phase. Okay, that's what you need to understand about it. Okay, this is the markup phase. Okay, understand this way. This is the markup phase. So since this is the markup phase that we are in right now, what are you supposed to be doing right now? So let's go back right there. So the markup phase, you see that market sentiment is dominated by optimism and excitement, meaning that people are optimistic that of course that the market is going to keep on increasing and making them money. And since we have Bitcoin having around the corner, what is going to happen? Market is still going to keep doing what? Topping. So what are you supposed to be doing right now? Since we have these characteristics right here, that the market is going to keep doing what? Uptrending, and the market is going to keep doing what? Increasing in trading volume. So when there's increase in trading volume, the market tends to do what? Increase. So and right here there's what they call the favorable economic condition, meaning that there's going to be a lot of news saying that blah 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 blah, Bitcoin is going to be doing well, Bitcoin ETF is going to be getting released sooner. What's this going to be doing? It's going to be increasing the price of the crypto market. So right here, that is what is happening currently. So what you're supposed to be doing right now as a trader is that you're supposed to calm down. Okay, we can't be buying from here now. The market is just here right now, and we can't be buying from there. Of course, we can't be buying from there. So now the market may go higher to this base. Don't FOMO. Don't have that fear of missing out. So allow the market to calm down. If you can get any entry around here, you can get an entry here. Okay, hold on, I'm gonna just get this right. Okay, if you can get an entry from here, let's see if you can get an entry from here. Okay, of course market is definitely going to correct. Okay, yes, because the more there's more supply, remember, when there's more supply, when there's high volatility, when the market gets to that base, it must come down. So don't be in a haste. So if you can get an entry from here, okay, good. Then if you can as well get another entry from this base right here, okay, yeah, remember you want to be buying when there is a low volatility. Don't just rush. Okay, so if you can get another entry right here, we are as well fine with it. Okay, remember when the market is right here, you are okay. If it gets right here, we are still fine. So the last entry is going to be this entry. Of course there could be a possibility market get into this base. Okay, but the possibility is not too is not that kind of like really possible, but there's every possibility that anything can happen. Okay, so that is it. So the first one right here is this, the first entry, second entry, and a third entry. So that's how you make your plan. Okay, so that is it. So in this case, we are not losing, we are not going to lose a lot if we are entering from the first base right here, because if the market could retrace right here, that means we are buying from a low volatility. Okay, yeah, and of course, since we have other demands right here, okay, we have that the market is going to do what? There's going to be favorable economic conditions, there's going to be an uptrending price chart. This is enough proof for you to like get a good entry and make sure you're not just doing being hard on yourself by just buying at the top. Make sure you're buying from here, buy low, buy low, buy low. That's very simple to do, guys. So that is it. So now here is our markup phase we are in. Okay, so don't forget that we have the markup phase right now. Okay, the markup phase. So the markup phase, okay, this is the markup phase when you shouldn't be playing. Okay, and the markup phase right here, this is when you know that the market is going to be doing what? Yeah, the market will keep on increasing. So have it in mind that during the markup phase is when you should have this in mind, that there's going to be increase in trading volume. Okay, so yeah, trading volume. So this is enough confluence for you to do what you want to do in the market. This is enough confirmation for you to take good entries. So this is your first entry, this is your second entry, and this is your third entry. The market could even hit on this accumulation base right here. We are good, guys. We are good, guys. So that is it. So we are actually on the markup phase now, right now, markup phase. So now I've been able to talk about the markup phase. So now let's go to the distribution phase. So I'm going to go back to the historical data, the past historical data, to get the distribution phase. Okay, now so this is how the distribution phase is going to be looking like. Okay, so I'm gonna just do this. Okay, now this is how the distribution phase is going to be like. So here, let's see this as the distribution phase. Okay, I don't want us to do too much right here. I just want to give you guys the picture. So here is distribution phase. You see how dangerous that is? Distribution phase. Okay, distribution. Okay, phase. You can work with this. Okay, you have all of this stuff on your chart, on your ATR. You can see the way I'm just listening. I'm making it easier for you to understand, and I know that you're enjoying this video. So this is the distribution phase. What is going on? Market's about to go down. Boom. You see that? That's a huge drop. There is a distribution phase. So during distribution phase, what do you expect the market to be doing? So now let's come on the characteristics. This is how I made that money. It's not easy. So here we are looking for low price volatility. So in this case, we have this. Okay, yeah, we have this. You should have that on your screen. Okay, just to remind yourself that this is during a time when you be looking out to take advantage. If you're a future trader in the crypto market, this work, like this is even the best video for you. Okay, so that is it. So let's get the horizontal trend line. So you put it right there. You see this distribution phase. So we should expect to see a low price volatility. So the low price volatility is going to come from, the market started falling from there all the way down, all the way down, all the way down. Okay, you see that? So here is a low price volatility for you. Okay, and if you get under entry around here, is a low price volatility. So yeah, so this is what you should expect when you see this distribution phase. You should have in mind that there's going to be a low price volatility, meaning that the market is going to fall. Okay, the market is going to fall. Okay, yeah, so the market is going to fall drastically. So let's put this low price volatility right here, down here, so you guys don't think that I'm talking about, I'm saying that here is a low price volatility for newbies in the market. So let's put it right here. So you should be able to expect that, of course, that the market is definitely going to do what? Go all the way down, and you can be able to find a low price volatility entry. So if you get any entry right here, some people may may buy using a dollar cost averaging. Okay, while some people will still wait for another entry right here. So anyone you want is okay as well, but you may still wait a little bit. So that's it for distribution phase. So coming right here, okay, there's going to be elevated trading volume, but without an increase in price. So when you have this in mind, okay, these stuff should be your confidences. These stuffs right here should be your confidences. This stuff right here should be your confidences. A confidence is confirmation of what gives you urge. Okay, so you know if you are buying or not. So right now, since we are going to expect, since the market is not going to be doing too well, so in this case, we may even take off this low price volatility right here and put it all the way down because the market is not going to be increasing anymore. So we may get an entry from here, get an entry from there, boom. Yeah, okay. And what happens when you hold onto that your trade? What happens? Okay, the market will keep tanking. So as the market is tanking, there's every possibility that this current market right here, okay, we are around the markup phase right now. Before you know it, we are around here. The market will hit all the way up to this base. There's a possibility for that. Okay, so that is it. So that's how you trade. So now the last but not the least, which is the markdown phase. Okay, the markdown phase that I said that is during the recession period. Okay, is almost same thing. So now let's come on the confidences right here. Use these stuffs as your confidences, these characteristics as your confidences. Write it down, use it, and always put it on your chart. Okay, so during the markdown phase, we expect that people are going to be scared. There's going to be downtrending price chart, and there's going to be elevated trading volume. There's going to be unfavorable economic condition. So in this case, now what are we going to do? We are going to go back, and look for that distribution phase can still work same. Okay, now this is it. Now this is it. Okay, the markdown phase can just be like that distribution phase. So I don't want this video to be that longer. Okay, you can just do it that way, guys. So that is it. It's very simple to understand, guys. So you're going to be seeing bad news about the crypto market. There's going to be downtrending price charts, meaning that a lot of people are scared. Okay, so since people are scared, the market will keep dropping. Like the market will drop so much. Okay, so that is it. So when you want to, the reason why I'm using the total crypto market cap is because there's no time to be analyzing each coin so one after the other. So that is it. I use this total crypto market app, crypto market cap, which is this right here. Any of them? Oh no, this one right here. Okay, yeah, I use it to be able to measure the whole crypto market. Okay, so with this, I can be able to know on what is happening generally in the crypto market. Okay, it will help you as well to do your analysis, to help you as well to do your prediction, to help you as well to carry out any kind of market reaction you want. So on my next video, I'm going to be showing you guys on how to do the technical analysis as well the risk management aspects of all this whole stuff. Don't forget, okay, your key takeaway is that you must use all these whole characteristics right here. Use all of them as your confidences. Okay, it will help you so you know exactly what you're doing. Okay, so remember that sometimes the crypto market doesn't respect the M pattern and W pattern, so you should be able to understand that. So now work with only these characteristics. I'm going to drop the link for you guys for this crypto.com article so you can go watch it. What I need you to do is a simple thing. Come on these whole characteristics of each of the market cycle, copy all of them, put it down on a note. That is your confidence. So these are your confidences, meaning that these are the things that you should be looking out for. Your confidences is like your confirmation, what you look out for before you start doing anything. So I hope this video is helpful. And if you are finding value, don't forget to share this video to all of your friends. Okay, don't be stingy with this information. And if you were able to watch this video until now, it shows that you really want to make it in life. And I wish you grace and prosperity. Make sure you smash the like button and catch you on the next one.